Greetings, everybody, and welcome to today's VentureBeat webinar on the secret to getting your indie video game funded, brought to you by Xsolla. My name is Dave Clark. I'll be your host today. Before we get started, just one quick note to let you know that we want this to be a very interactive webinar today. So if you have any questions for the speakers, we invite you to type them at any time into the Q&A panel on your screen. Also, if you have a question and your question is specific to one particular person, if you could, please be sure to indicate that person's name in your question so that we'll know who to address it to. All right, well, let's get started with today's discussion on getting your indie video game funded, and let's begin by meeting our speakers. Owen O'Donoghue is co-founder and CRO at Infinigods. Lawrence Mean is Director of Partner Experience at Xsolla. Nathan Solbrandt is Business Development Manager Europe Funding at Xsolla, and Dean Takahashi is Lead Writer at GamesBeat, and Dean will also be moderating today's discussion. Let's kick things off by meeting Owen first. Owen, why don't you tell us a little bit about yourself and the kind of work you do?
Hey, Owen O'Donoghue here, Chief Revenue Officer and co-founder at Infinigods. We're a blockchain gaming studio focused on making fun blockchain games. More recently, I was a director of gaming at Facebook for the last decade before getting into Web3.
Terrific. Thanks, Owen. Let's move next to Lawrence. Tell us about yourself, Lawrence.
Hi there. I'm Lawrence Mean. I'm the Director of Partner Experience here at Xsolla. I've been working with Xsolla for about 4 years, and I specialize in helping developers meet the right investor or publisher, and also expanding Xsolla into our China region.
Thank you, Lawrence. Next up is Nathan. Introduce yourself, Nathan.
Yeah, hi, my name is Nathan. Business Development Manager at Xsolla Funding Europe. My role is really developer relations, just working with developers to get their pitch decks as strong as possible, giving them advice around how to look for funding, and just really getting them customized with our product at Xsolla around funding as well.
Great, thanks, Nathan. And finally, Dean, tell us about yourself, and then you can take it from there and lead us into the discussion today.
Hey, everybody. I'm a lead writer for GamesBeat at VentureBeat. I've been working at VentureBeat writing stories for 14 years, covering the game industry for about 26 years. And I'm also running the GamesBeat Summit Next event next week on October 25th to 26th in San Francisco. So we're going to be talking about a lot of game stuff then. And thank you, Dave. And I'll get started here. First, a little bit of macro news. Drake Star Partners, an investment bank, reported today that both game investments and game acquisitions were up in the third quarter after a weak second quarter. And even the blockchain games were up despite the crypto crash in terms of how much money was raised and what kind of acquisitions happened. And game VCs also have a lot of dry powder, including A16Z, which raised a record $4.5 billion for its game fund. And yet, anecdotally, I hear that the super hot deals of the past are sort of disappearing, where an entrepreneur comes to the VC and says, I want to raise $5 million and your deadline is 2 weeks from now. So that's a little bit of the environment in which we're operating now. And that report is very fresh. It came out this morning. So any reaction to that? Let's start with Owen there.
Yeah, I think super interesting. One, I think, really good just to see VCs still still backing good game companies, and particularly some of the blockchain companies that were funded. Interesting thread. The ones that were called out in that article with big deals had already showed some traction, are solving some infrastructure issues, already have great content that actually has traction with gamers already out there. But certainly, while it's somewhat surprising, I think we were talking before, maybe it's also lagging that a lot of funds were raised last year, and we're probably still seeing some of that being distributed. Now, how they're being distributed is definitely changing, which I think plays into where we are in terms of the macroeconomic environment. And I think we'll obviously get into this a bit more as we talk, but certainly from what we've seen at Infinigods over the last 6 months is that VCs are beginning to focus more and more, less and less on ideation, particularly in the Web3 space, on what's your tokenomics model, more and more on ability to execute, ability to pivot type of a team. And so I think we're seeing some of that funding begin to move more in, I suppose, mature in terms of where it's being placed into, let's call it, safer investments or investment teams with more proven experience, as opposed to just pure ideation.
Yeah, in some sense, I would expect that the game VCs would probably behave in a way similar to other VCs, and the other VCs are definitely slowing down, right? And in the U.S. Venture capital market, the NVCA reported that the peak was the first quarter, and that there was a decline in the second quarter and a further decline in the third quarter for for all venture capital investments in the U.S. And so I would think that some of that concern for the market would be contagious, and so maybe this third quarter bump upward for the game VCs and the game industry here might be a little bit based on momentum. I don't know. Nathan, any thought from you on this as well?
Yeah, well, I must admit it was a little bit of a surprise to see that. Was expecting it to be in the opposite direction. Certainly, sort of anecdotally at Xsolla, we have a platform that attracts investors as well as games that are looking for funding, and we've seen a continued increase in the investment community for people looking for games on our side. So certainly there's an appetite for it. But yeah, so it's good news, that's for sure. And I think we spoke before as well, sort of seeing Roblox has reported really good numbers as well. There's always this talk of the fact that is gaming a kind of recession-proof industry, which I'm somewhat skeptical of, I guess, but it seems to continue to can move in a direction that's maybe counterfactual to other industries and other parts of the market. So yeah, certainly good news if you're looking for funding.
Mm-hmm. Yeah. And then, so what is sort of your maybe net advice for game studios seeking right now? Yeah. We can start with Nathan on that one as well.
Yeah. Certainly at the indie level or at the smaller studio size, what I'd always encourage people to focus on is to start very early. I see a lot of times games that kind of want to get to a vertical slice stage or hold back on looking for funding until the prototype's further along. Personally, I think this is a bit of a mistake. You really want to be out there testing your ideas as early as possible. You want to be gauging interest as early as possible. And if you're not getting interest at an early stage, at a prototype stage, for example, you have to kind of question whether you should make the game, because if nobody's telling you to come back when you've got a vertical slice, then when you do have a vertical slice, you should maybe not have expectations that an appetite for this game is going to change. The other thing I always encourage to start early is you're going to make mistakes, you're going to get things wrong, and some of this is just learned by doing. And the earlier you're doing that, the better off you're going to be, the more time you'll have on the other side to correct some of those mistakes. I think a big thing is obviously preparation. That's quite a simple thing to say, but it goes not just for your own pitch deck, but also to prepare for the people you're meeting with. What games have they invested in the past? What sort of fund are they running? What are the typical investment sizes? Even down to the very person that you're meeting, there's a huge amount of resources to understand people's backgrounds, where they've worked, where their expertise lies, what might be interesting about your game to them. And focusing on the person you're meeting with is always a simple thing, but it's amazing how often that gets overlooked, and people just want to talk about themselves or their own pitch deck without kind of understanding where the other person's coming from. So that'd be kind of two early tips that I'd offer in looking for funding.
And anyone else want to add to what Nathan said?
Yeah, I'll jump in here. I think that thinking about your unique selling proposition and how you fit into the existing market is very important as you're, early on starting to concept and, develop your game and how it plays and everything. I mean, like at tail end of 2021, for example, we had 78,000 games or more being released on the Google Play Store. So it's highly competitive out there, and kind of understanding early on how you fit into the market can help you, avoid having to think up of ways to differentiate yourself to investors later.
And anything from you as well? Or?
Yeah, I think that's it. And, we'll maybe get into more detail, but coming with what Lauren said, there's so many games out there that somebody has probably tried the game genre, you've done, but like really coming, what's your unique selling point? And then what we heard over and over, and actually from my time at Meta, when we'd often like work with various different startup gaming companies, is trying to understand, hey, what's your commercial plan to scale? Like, do you understand what's the potential value of like, who's the audience of the game? What do you think their potential value is, and how can you scale that? And so that's always been important. I think it's going to continue to be one of those things as you plan. You need to really have your homework done on.
I'd note that the audience is welcome to ask questions. Write your questions into the Q&A slot there, and we've already got a couple that have come in, and one sort of seems like interesting to bring up right now. For Nathan, how much traction and awareness for the game would be ideal for an early stage?
Yeah, look, I mean, it's always the more the better.
Mm-hmm.
Certainly, from an investor's perspective, the more traction you've got, the more proof there is that this has got momentum. And it's always that case of the first kind of 100 users is going to be the hardest. It's a bit of a difficult question, I think, for us to answer, because it's really going to depend a little bit on the type of game you've got as well. A lot of games are going through an early access process, so they're not even really getting a lot of that traction before they can get the funding. Yeah, it is a difficult question to answer because it is quite unique to every game that we see. So I don't know if I could give you an exact figure on that, to be honest.
Anybody else have a feel for that?
Yeah, I mean, I would just say there's a lot of ways to prove traction and awareness. It's, getting showcased, and Steam has a bunch of showcases, contests, grants. Government grants are always great, but really building that following, kind of diversifying where you're getting that from. But as terms of like how much, it's get as much as you can, right? And there isn't really like a minimum that we recommend.
And moving on to our next question, given what we said about the economic environment today, should the game startups change their pitches in some way? Owen, you can lead that one.
Yeah, I think so. I think it's going with. I think they do. I think it's like really starting to look at, again, focusing more and more. And I'll keep harping on this on like, hey, your commercial plan, like how you plan to stand out from the crowd. And so I think what investors, my sense is they will be more risk averse. And so coming with the plan of, hey, here's this like really interesting idea I have. I think it's going to work maybe on this platform. That's one thing. But to come and start to say, okay, we've planned out, we've said, here's where we think we can get retention for players. Here's what we think monetization will be. Here's what we're expecting our costs of acquisition. We can actually show that potential growth in users and growth in revenue. I think that's going to be asked for more and more. I think what we saw at the tail end of 21, start of 22, was there was some focus on what's the commercial plan, but it was more and more, and particularly I'm talking about the Web3 space, was how do we actually bring some things that have worked in Web2, or there's some just new ideas with Web3 and the concept of digital asset ownership, and how can we just apply that? We're in the new era of the internet. How do we just get all the best ideas, get them funded, get them out there, see what sticks? I think we're going to come around to, and if not already coming around to, okay, we want those ideas, but we need to see where the returns are and when they will start to come in, and also that they're sustainable. So it's maybe not relying on a big upfront NFT mint or a big token sale, but it's, oh, I see there's going to be regular consumers or gamers are going to interact with your product, and they're going to continue to want to monetize in some fashion, whether it's NFTs, whether it's in-app payments, subscriptions, et cetera, et cetera.
Anybody else on changing your pitch, I guess?
Yeah, I mean, I guess I would just add that be aware of how your game would play in different regions and how the potential for it to expand globally. Because at the end of the day, it's a business, right? And if you create a relationship with an investor or publisher, they want to go into it being able to continue it for a long time. And the more that you understand, like, you don't have to be an expert in economics or an expert in monetization, but you do have to do your homework and sort of take a look and have that knowledge going into the conversation.
And I don't know, Nathan, anything?
Yeah, I would add, it probably seems quite straightforward, but just a focus on the game as well. So I think there's probably been quite a bit of frothiness around, and I've seen a lot of pitches that are really looking to get a game funded, and I get through the pitch and I don't hear much about a game. I'm hearing about an underlying technology of some description, or a token, a blockchain, and these types of things. And that's certainly worked for some people, but when we're talking about getting a game funded, I think realistically the consumer is interested in the game. If you're going to get them involved in the game, it has to be a good game. It has to be fun to play. If the technology can assist that, that's great. But leading with the game is something I think is going to become more and more important. I think as perhaps some of the money in that part of the industry kind of changes a little bit, and we go back to a focus, I think, on the core gaming as well.
Mm-hmm. I remembered when VC I was talking with, he laughed when he got this pitch that came from a blockchain game company that had everything laid out except any description of the game at all. that seemed like a bit of an sort of a hole in the
yeah. It's actually insane, and we'll look back on. And to be fair, it was like a lot of folks coming from the finance and the DeFi, decentralized finance, were saying, look, we can make very attractive investment products, but we need to gamify it. And I think we've seen that is not holding up in terms of being a sustainable long term. And so just, what Nathan was saying, there's some examples of that where it's NFTs and I'm going to launch a token, and, you don't want to say magic internet money is going to come out of nowhere, but that there's this pool of retail investors will hold up the game despite nobody playing it. And so I think everybody, both the VCs, a lot of the folks who personally invest in NFTs, are really beginning to ask those questions and say, okay, what is the actual game? Like, has a similar game been out there before? Has it got traction? What does that traction look like? Like, there's actually a lot of data sources that people can actually use to say, well, look, on this platform, I can kind of get a sense of that. If I apply some new things, this is what it may look like. But that wasn't happening as much as it should have. But I think thankfully we're moving in that direction now, particularly in Web3.
And Lawrence, I wonder if you could lead on this one. What kind of investor should the game startups seek, especially if we're talking about indies here? Right?
Yeah, absolutely. I mean, there's, of course, everyone understands that with a publisher, they take a part of the launch and the marketing off of your hands. But when it comes to like investors specifically, let's talk a little bit about the basics, right? You have venture capitalists who are generally looking to invest more in equity in a studio, and they're looking to invest in a team. They typically won't be looking at brand new studios, right? So if you're just foraying into games, venture capital is going to be a little bit high up there for you. And they are also looking for a higher rate of return from their investment. On the other hand, for newer indies, project financing is a really great option. These are people who are looking to fund just specific games. And they typically take revenue share instead of equity. So those are the two basic types of investors. I mean, we can really drill down deeper in, but when it comes to, okay, should I go with a venture capital or project financing? Take a look at where you are in your studio's journey and how experienced your team is, and do you have a history of work that is going to interest a venture capital firm or not? So that's mainly what I would go into. And we have on Xsolla funding, we have investment funds, we have publishers, so it's an easy way for your people to connect with them as well.
There was already a question too, since you referenced what Xsolla does a little bit. Do you want to describe that a bit more? And also the question was, what is the cost for the services related to this sort of investor?
Yeah. I'm going to let Nathan take this one. I think that Nathan can explain that.
Yeah, so the core product with Xsolla Funding is called the Funding Club. It's a matchmaking platform. Have around 190 investors and publishers there. Every game applies. We typically require pitch deck, a playable build, and a trailer of some description. Occasionally, we'll let games in without a playable build. Basically, what we do is we play test every game. We check every pitch deck. It has to meet a minimum quality. We have to really sort of see through the core game mechanics and playability that the team can execute on where they want to go with the pitch. From there, it is just a matchmaking platform, and it's actually entirely free to use. It's something we do as a marketing exercise. From our perspective, the more games that get funded, the better. And we also trying to provide a service. It's our belief that good games can come from anywhere, and we don't want to kind of exclude developers because of geographic location or the costs associated with getting to somewhere like GDC. So this is a way to get exposure to all of those investors and publishers. We do have other products within Xsolla Funding, including an accelerator program and the games investment platform. Accelerator program, we're getting ready to accept our second batch. It's a slightly more complex deal. Typically take an equity stake and a bit of revenue share. And the game investment platform is actually a co-investment. It's kind of like a closed door Kickstarter for accredited investors, where we'll raise from multiple investors who basically buy a piece of revenue share within the game. But the Funding Club's the kind of core product, and it's the entry point to all of our services. And yeah, that's a free service, so it's definitely worth reaching out to myself or Lawrence if you want more information on that.
I guess there was one thing we didn't actually cover in the sort of like what kind of investor is appropriate. I guess angel investors. Does anybody want to sort of explain that? And maybe I would wonder whether right now angels might be concerned because like their portfolio values have kind of sunk a little bit, right? If they're crypto investors, we know what happened to crypto so far in this winter for crypto, and then also the broader stock market, I guess, could affect their sort of net worth as well. So, but maybe does anyone want to tackle explaining the angel investor opportunity?
Yeah, I could definitely start. I think the and we actually have some angel investors in our round as well. And I think the key piece, it's really variable. Like it really depends on the angel's personal circumstances, which can absolutely change. And some anecdotally, some of those angel investors, for example, may have large positions, whether it's in U.S. equity markets or whether it's in crypto. And obviously, they've been drastically affected in the monumentally affected over the last 9 months. And so their appetite not just to fund, but then to be a supportive investor, if those other macro thing changes, could actually alter. I don't want to say alter how supportive they are, but may certainly affect their ability to contribute to future rounds. Now, conversely, if they have, say, short positions or they do quite well, let's say despite the market, then they may be very useful there. But I think it's one of those ones where looking at some of the venture capital firms, and obviously particularly the larger ones, they do have sufficient capital to really ride out, and they're able to stick to their core thesis of why they're investing in, let's say, gaming or startups. And so you look at somebody like you mentioned Andreessen, and I think you mentioned that $4 billion right now. They're allocating a large chunk to new technologies, to crypto. Gaming is going to get a fair share of that as well. So a fund like that, you can be very confident that if your thesis stands up, but may take a bit longer because of economic changes, an investor like that, I would expect, will be there for you. Able to their thesis is unlikely to change, versus an angel where typically their thesis could change based off market conditions. Key thing, again, I think Lawrence mentioned this earlier, is doing your research. So whether it's an angel, whether it's a VC, understanding their motivations, understanding when do they expect return, because they are all investors, they do expect a return, and get a sense of their time horizons. And are there any other outside factors that could influence that time horizon, whether it be for the angel or for the VC?
Good. Anybody else want to add to that, or shall we move on?
Yeah, and I think just I understanding that who's specialty and who's general. If they are they specialize in investing within the games industry, obviously they're going to understand, you know, the ebbs and flows of how it fits into the larger macroeconomic landscape. So, yeah.
Yeah, very good. So, how do you actually convince the investor to take the pledge? I guess, Owen, maybe if you could go through some of your own experience there, like what do you think was very convincing about your recent pitches?
Yeah, I can go through, actually start some high level, and then for the investor who did actually lead with us can actually have their questions specifically drawn up as well that may add more color here. But really the three big things that I felt got interest and ultimately investment in us was, firstly, with the team and the experience. And so, you know, that's easy to say if you have that experience, but that was a differentiator, particularly at the time when we were raising, where typically a lot of the other companies building blockchain or raising for blockchain games were very much had a finance background. And so we leaned in heavily, and even as folks who recruited before we were paying anybody, but recruited people in to be part of the team, really trying to demonstrate, hey, like, you know, not only have the team built games before, but they know how to monetize and scale games, particularly from a Web 2 capacity. That was a very big point for us, and actually really played into how we looked for other members of our leadership team and our team in general. The other real piece was, how are you going to win? And so this goes back to your value proposition and being able to stand out from the crowd. And we leaned away from what other teams were doing in Web3, which was a tokenomics model, predominantly around play to earn, company making primary revenue off NFTs, and then a token that everybody would hope would continue to raise in value. We leaned very heavily in that we liked Web3 from the ownership concept. We think that actually potentially could increase a player's lifetime value. Forget about token. They actually own an asset in a game. They may retain longer because they have full ownership. They can move it to other games, even other developers potentially. And so we leaned heavily on effectively the LTV per user and our plan to be able to acquire players. So very boring from a ideation, it's the coolest game ever, but really focusing on, if we add in some interesting elements in Web3 to some things we've seen work in Web 2, we believe we can actually get more value per player, and therefore we can scale through user acquisition, publishing, et cetera, we can scale better than incumbents. And so that was how we stood out. So for some investors, particularly some crypto investors, that they weren't super comfortable because they didn't understand that model as well. Some of the gaming investors or the big tech investors like that. I think what was, if I can maybe go further, I don't want to hog too much of the time here, but Pantera Capital invested, they were a lead investor. They took 6 out of the 9 million. So real big show of faith. And so these were the key questions they asked in one of our follow-up calls. And so why is your approach different? Was their number one leading question. So how are other people approaching the market? How are you, so less about the game, but what is your approach? How do you think about like testing, getting an MVP out there, understanding traction, being able to make changes? So they spent a lot of time with us on that. They also really, and I probably compare us on this commercial plan. Was big. How do you plan to monetize? Is it sustainable? And what they're really getting away from is these big upfront NFT mints. That's interesting. We've seen some successes with that, but how do you get that always on recurring, growing revenue within games? And so going through that piece, and then last was economic design. And so there was some like, well, where does the intersection of Web3 and Web 2 come in there? How do you think about that? And so that was where we started to go into where there are some game types that really can work. There are some very interesting things of how an economic model could work using some Web3 concepts in there as well. And so what was interesting there, where they said, look, the game is, you're looking at games that have proven track records in mobile and PC, etc. That's great. We think you can build that. But what they really said was like, we understand things are going to change. Things are going to change, whether it's a macro, whether what works in the market, whether it's the gamers, consumers' sentiment, that's going to change. And really, it's your ability to understand that that change is happening and pivot against that. And I thought this is a very mature VC, very well experienced. They've had a lot of wins. They've had a lot of losses that they've learned from as well. And I think it was them recognizing, you can have the best idea in the world, but something's going to happen where that doesn't become the best idea, and it's your ability to understand that, to pivot, and really like treat this. You need to test, learn, iterate, and constantly try and work that way, as opposed to, hey, we've everything figured out on paper. You just got to fund me, and it's definitely going to work.
Interesting. Any comments from Nathan or Lawrence on some of the things that Owen said there?
Yeah. I think a lot of what Owen described is finding alignment with the investor or the person that's willing to give you that money. So, from my perspective, 90% of the battle is finding that alignment. If you've got a free-to-play mobile game and you go to an indie PC publisher, no matter how great your concept is, it's outside their scope. It's a little bit outside what they typically work with. Trying to convince them to take the plunge is also having them feel like they have the ability to validate what you're doing. And what Owen's described there, I think, is about finding that validation where the two teams can understand each other, and you feel like you're in a place where they're aligned. And this comes back to what we spoke about doing that research ahead of time. You've got to look for the investors, whether it's publishers, VCs, that understand your space and have worked in that space to some extent before, because that's where you're most likely to find that alignment. In terms of convincing them to take the plunge, I mean, that's the kind of secret sauce question there. If I had a straightforward answer to that, I'd love to share it.
Yeah, I mean, at this point, convincing them to take the plunge, they've seen your game, they like it, they're interested in learning more, right? I think you really have to convince them that you can execute. So not selling yourself short, being realistic about your timelines and deadlines, having those sort of budget questions ready. How are you going to spend the investment, right? How are you going to divide the budget? When do you think, knowing when revenue is going to come in and how much is going to come in and what sources it's going to come in from, being ready with all those questions when they start to ask them is important. And, if it's been a while since you talked to the investor or publisher, which sometimes it can be, right? It can be months between when you have your first pitch with them to when you have your follow-up meeting. Be prepared to show what you've done in that time, right? So they know that as a team, they can trust you with their money. So not just that you have a great idea, but that you can be trusted to build a good relationship with them.
And when you covered the kind of questions the investors ask you, once you have their money and you're on a schedule, what other questions start coming in? I guess I assume is one question is, are you guys on schedule? Right?
Yeah, no, that happens, and then actually we found investors can be different, but typically they it's looking for things like, what's your burn rate, what's your progress against product, do you have revenue coming in? So those kind of basic questions come up. I think one of the interesting check-ins, particularly early on, and we're seeing this, is like, where are you in terms of like hiring against your team? And what does your org look like? So now you have that. So how are you building out your org? Are you changing anything on the product side? So I think they really start to look at those kind of early signs of, okay, where are you actually needing to invest that funding as well? Again, a lot of them are, from our experience, really, a lot of it is trying to see, hey, like, are they the original idea? So they're still thinking about that thesis, and obviously, you shouldn't be changing that at all. But it's saying, hey, your ability to execute, and so, like even saying, hey, I need to, now I have the funding, I want to go to market and hire a great game designer or a great game artist or a great marketing person. I think it's your ability to actually be able to go and do that once you have the funding as well. We've also seen when we've done various bits of public relations that investors really like that as well. So it's being a sign of, hey, you're going to get the game out there, you're going to get your name out there as well, beginning to attract more interest in there. So that's what we've seen so far. And you do obviously need to be, once you get a funding, be very good stewards of their capital. Like, they've placed a very big bet on you, and you do need to be very responsible about it. And that's about how you spend it and the time. Showing progress there as well. Like, we are utilizing these funds in a good fashion, and we're not hanging around. So the investor does want to get a sense of, hey, look, first few months, this is great, because I think really need to be thinking about, it's not a one and done here. These investors, we've already seen they're introducing us to other potential partnerships. They're already trying to lay the groundwork for, hey, if we see some traction here, I think ourselves and even other investors can jump in to continue to fund you if it's needed. And so it is very much about keeping an always on relationship with your investors, make sure they feel very aligned with what you're doing, and make sure they feel they have some, which they do. Really making them feel like, hey, they're part owners here, and we're all trying to build something great together.
I'd like to remind our audience that please ask questions if you're curious about things. We're going to get a bit more granular from here on in. So just whatever your interests are, let us know. And one for Nathan, or for Owen again, I guess, is like, how do you compare the crypto pitch and the non-crypto pitch? And crypto was about, crypto games, blockchain games were about 40% of the numbers of deals in Q3. And 50% of the money invested. And that's interesting because crypto, right? Blockchain games are about 2% of the gaming market, right? So, it's interesting. But Owen, do you want to kick us off there?
Yeah, I think I can definitely do the comparison. So the let's say mobile gaming, which I'm probably most familiar with. The typical pitch is, what's the game concept? How are you, talk to me about what do you expect your DAO to be, your MAU, what retention rates, and what are your monetization rates? So how are you planning to monetize against that? And then what are your expected costs of acquisition to scale that? And it's pretty linear. And obviously there's things like the team, what you're planning to do different on mobile. And so some pitches that I saw pre-Infinigods, particularly we actually saw a lot of funding out of Turkish game studios in the summer of 21. There's pretty big bets placed there. And a lot of those pitches were really interesting. They were like, I'm going to take this genre, could be casual. I'm going to maybe put some meta on it that's a bit more mid-core. And we actually think that's going to increase the player ARPU by average revenue per player. We're going to increase that by X%. Therefore, we can scale on the user acquisition channels, which are kind of an auction-based system. That's Facebook, Google, Upload, etc. And we think we can actually create a game and we can dislodge incumbents in the App Store. And that was the typical pitch that I was seeing, and very much focused on your ability to do live operations. And by live operations is like on a fly, be able to increase monetization within the game. So there's a question already in the Q&A around, microtransactions versus upfront payments. Like microtransactions was like where those investors typically, from what I saw, are looking for that. And then looking at, if I compare that, so it's very linear. It's very much like we want to see some traction, or you've done this before and you've done this before in the genre, and you're just taking a slightly different go at it. Where the crypto pitches, they fall in two parts. So the ones that we've seen continue to get funded are the platform infrastructure places. So Mutable X are up there, who are obviously a blockchain gaming platform. And that's very interesting for an investor. Hey, you're going to be the iOS of blockchain games. Yes, I want a piece of that. Demonstrate you have some things running, you've got tech. But going to the games themselves, they were really leading with, as we discussed earlier, really leading about tokenomics. And so really leading about how everything about the game is going to be how people earn, how that earning is going to have them keep coming back to the game, and how this will exponentially grow. And I would say a lot of the pitches were based off the success that Axie Infinity saw in the summer, and really from April 21. Arguably, it's still doing pretty well today, to be fair, but when they were really hitting their high points, which I think was September, October last year, it was a lot really based off that gaming is not just about gaming, it's going to be about earning as well, and that we can create a sustainable economy through a crypto token to actually do that. And so a lot of the investors were saying, okay, how do we take Axie? And so a lot of the companies, the startups were saying, how do I take that model and just apply to different game genres? Move to earn was one that we saw with StepN, GenoPets. Everybody moves, they earn money, or they earn a token. And so that they were certainly the pitches we were seeing in crypto. And I think where the from an investor point of view, I think there's a real interesting where they're trying to de-risk, and investors are always trying to de-risk. So on the Web 2 side, show me traction and I see this moves forward. That's how they de-risk. Show me evidence of past success or initial traction. For a Web 3 side, the way I read it, the investors were saying, if you can, in the market at the time, issue a token based off either utility or ownership, there was a set of retail investors out there who actually buy into that, and other investors. And so from a VC or investor side, they can say, look, if you issue a token and I get a percentage of that, well, actually that de-risks it, because then I can immediately, I'm not waiting for IPO or an acquisition. I immediately begin to actually have an ability to recover some of my revenue back, or some of my investment back via a token. And we saw that even expressed by certain potential investors saying, I don't even care about equity, I just want your token. And this is all kind of January, February in 22. And so that's where there was a lot of, and I would say a lot of retail demand to get into new tokens, with the expectation, hey, this can be the next big thing. I think that has been tempered dramatically over the last 6 months. But that was the typical gaming pitch that we saw from a crypto side, that was going in there. But I don't think that market is still there. And so those good Web 2 fundamentals, and I hate even calling it Web 2, those good gaming fundamentals of, hey, is there a player base? Do you already have traction? And I invest from there. I think that's coming more and more back into the investor's mindset.
As far as like the common mistakes that entrepreneurs make, what do you think those are, Nathan?
Yeah, so at the kind of indie level, the most common mistake I see in a pitch is pitching the game as if you're trying to convince the investor that they would play it, and not thinking about it as a business. And I know at the indie level, people typically don't go into developing an indie game because they want to raise money. It's because they want to make a game. So I can understand where that sentiment comes from. But when you're sitting across from someone or a group of people that are looking to invest in your game, you've got to shift into that mindset of what they need to hear and see. And that's really about building a business case for the game. So, who's going to play the game? What are they playing now? Why would they move to this game? Where does this game fit in the marketplace? Thinking of it in those terms is what I really lack seeing a lot of the times, and it's the biggest kind of barrier I think to the indie developers kind of making more headway than they actually do. A lot of other common mistakes I see is like a budget that has a range in it. So they pitch this game to you, and you yep, and then they say we're looking to raise between $150,000 and $400,000, for example, right? And as an investor or publisher, you kind of go, well, what game am I investing in now? Either the game is the game you're pitching to me, and that's what it's going to take to get it to market, and it's going to be successful, or it's not. But why would there be a range here of what you need? Either you're overinflating it, or you're going to cut features before we've even started, and how is that going to affect the game? I often see as well at the indie level, kind of people have the mindset that if I bring the number down, I'm more likely to get funded. So you very quickly you can do the kind of handkerchief mathematics and kind of say, okay, this is how long their development schedule is. This is roughly how many people they need, and you're already looking at it going, they're like $100,000 short here. And, very counterintuitively to people that, maybe haven't worked in that space before, the investor immediately is like, well, we're going to be on the hook for this. If they can't get to the point where they ship this game, we're committed. The only way we can ship the game and realize any return is if we continue to fund this. So in many instances, even at the lower levels, the publisher or investor would rather kind of overcommit to make sure the game ships, to make sure that they can balance that risk and they can manage that risk across their whole portfolio. As you can appreciate, if they've got 10 games and they're all underfunded and they all come back and they need to go to the well with them, that becomes a planning nightmare. But yeah, overall, just to wrap that up, the biggest thing is just not pitching the game as a business, not trying to convince the investor why this is going to be a successful investment for them, and having, as we've spoken about a lot already, thought about how it gets to market and why that success will be there for the investor.
And anyone else on that? Or, yeah.
I mean, I would say that for a lot of indie developers, it's keeping your own interests in mind and also remembering to protect yourself, right? And so like when you go into negotiations, you got to have somebody who is a legal person that can look over all those papers, those documents, tell you if this is a good deal or not. For us, for example, when we give someone a contract and they sign it and send it right back, that's a bad sign, right? That means they don't understand contracts. They didn't have anyone look over it. They're not negotiating terms to look out for themselves as a developer. And then, on a similar vein to that, when you are showing the work you've done to investors, you got to value the work, the monetary value of what your team has already put in, right? They're going to want to know how much you've already invested into your game and the hours that you've spent and how much you would be paying yourself for those hours is definitely a part of that. So making sure, of course, as a developer, you're always you want the relationship, you want to bend over backwards to get it, but you got to look out for yourself as well, and that's going to show the investor that they can trust you.
Very good. I don't know, Owen, if you wanted to also weigh in.
Yeah, I think the legal college is really good. Like it's one of those things. Do not skimp on that. Comes to account, comes to any other agreement. I think that's it's a very strong sign to the investor. It goes back into what Lawrence was saying. Like, make sure you're protected. Again, it's a two-way street. So it may get into, look, I really just want money. Like, I really want to get this deal. And it's like, look, like be proud of your own value here as well. There are a lot of investors out there. And so, you again, as you, maybe this is a slight transition, in terms of your strategy, not even just taking the first money that comes along, really break down how much do I want to raise, add a bit more, like, again, I think what Lawrence said is so like on the ball. Things like, don't under yourself go short here. So go a bit larger if you need. If that gives you an extra runway, you will have more costs coming up, like legal, for example. That's super important. Things will happen where you'll need more. And so if you can line up, particularly for your lead investor, have a number of companies interested in taking that position. And if you need to raise, say, $1 million, not just saying, hey, I just want one company to do it all, but saying, look, I'm going to chunk this up. I want a lead investor at, say, 500,000, and I have space for two other investors at, say, 250K each. And that 500,000 lead investor chunk, you go to 3 or 4 investors, or you're trying to develop a pipeline with 3 or 4 very active people interested in that. And what you will see then is, once they realize they're not the only company in the deal, they will actually start to, that will pick up significantly for them as well. And so doing those things, like as a term sheet comes back, like not just having legal, but having been able to negotiate multiple term sheets for your lead, is actually it's a position you want to be in. And again, planning and who you're talking to and how you're lining up your VC meetings is very important there as well. And so we've probably I've gone on a bit of a tangent on that side as well, but that's showing your own value, not just say, hey, I'm willing to take any deal. That's very, very important, both for the investor and for your own company.
And we're getting down to our last 10 minutes here, and I think there's one audience question we'd like to get to, and then for Lawrence as well, if you could have a quicker answer on this one. What are the alternative sources of funding that the entrepreneur should be aware of?
Sure. Yeah. Well, first of all, family and friends, right? Your family and friends are the first people you should ask for investment because that's going to be the easiest money for you. But of course, when doing that, you got to think about contracts as well. It's not just a handshake agreement, and it'll save you a lot of headache down the line. Grants, contests, prizes, governments have a lot of different grants. They're everywhere. So you got to do your research and really diversify. Don't just go into one source of funding because it's not like just one source will give you everything you need, right? And the more grants and things you've been awarded, the better it looks. And don't underestimate pre-orders and founders packs. You know, if you built up a good community, that community can support you as well. Everyone knows about crowdfunding already, and incubators and accelerators are another one that's really great. Those will, however, ask for more from you. So they could ask for equity, they could ask for a bigger stake of revenue because they're really putting in the work to develop your team and develop your studio, to make sure that it is a commercial success. So I think those are, that's a quick rundown of some alternative sources of funding that they should be thinking about.
Okay. This one might be quick as well from the audience. Is there a preference for Unreal developers versus Unity developers?
So you want to go on?
I can go first.
I was gonna say, from my perspective, I don't see a big preference. So, it's obviously maybe there are publishers or investors that have a preference, but again, the person playing the game typically is not going to know what engine it was built in. They're going to know if it's fun or not, and where you build it, and that underlying technology that allows you to create an interesting, fun, engaging experience, the consumer really is not going to care about for the most part.
Yeah, it's good to say the same. I think the platform, is probably more important to the investor and what the addressable market is on that platform. And so, like, Unreal is on mobile, but typically I think it's say using console, PC. Unity is, I think, 80% of the mobile market now, as well. And it's also easier to hire on Unity, like, for sure. There's a lot more Unity developers out there compared to Unreal right now. But investor side, it doesn't seem to be a huge factor.
I'm watching a clock now, but I think we can get to this one. I like this question as a sort of like a closer. Like, as an entrepreneur, where do you stand your ground compared, when you're talking to investors?
I think your thesis in particular of, like, the problem you're solving or the opportunity you're going after. I think you need to be. They need to see it in the quiet of your eyes. It's kind of like an Irish expression. Like, you really believe in this, and like, what you're doing is going to be different. Yes, you've got your commercial plan. You have traction, or you have a plan there as well. But, like, that kind of belief is something that is very, very important. And, like, for us, it was like, my belief was, like, Web3 has a ton of potential, but right now the games out there are just, like, they're not suitable. Like, they're not going to get a lot of people in. They're DeFi, and it's like, I just want to make fun games where there's ownership, and I think that's going to be the future. And I stand by that is going to be the future of gaming in 10 years. Everybody will have will own game assets on the blockchain. They'll be using that to play in multiple games. And I think having that belief and standing your ground there as well for investors is very, very important. For them, it gives you a sense that this person's going to kind of leave it all out in the field, to make this a successful business.
Yeah, I would sort of at the indie level, I would be really focused on standing your ground on the budget. If that's what's going to take to make that game, and the investor comes back and says, "Hey, we can, do 80% of that," you need to be pretty strong on that, because if you don't have the budget, you're not going to ship the game. Having said that, the levers you can pull are going to be in the revenue shares, or what you're willing to give up for that amount of money. So, if you're holding steady on a revenue share and then you're reducing the the money that's coming in to fund the game. To me, that's kind of the opposite way you want to think about it. You want to be flexible with your revenue share or what you're willing to give up, but you need to be pretty firm on the amount of money and capital that you need to raise to execute on your vision. Because if you can't do that, and if you can't hold firm on that, then I don't see how you ship the game.
Yeah, I think it's obviously different for everyone, but I think it always goes back to, do your research. You can talk to the developers that publisher or investor has worked with if you can find them. And it's always a good idea to check with them and see how that relationship is, what's worked for them, what hasn't worked for them. And the industry is so small. I think it's very easy to always find somebody who knows someone, right, that is familiar with that relationship. So do your research.
Thank you, everybody. This has been very informative, you all did a great job. And I'm going to turn it over to Dave Clark.
Thanks, Dean, and a big thanks to all of you for all of your insights today. Owen O'Donoghue, Lawrence Mean, Nathan Solbrandt, and again, Dean Takahashi for moderating this discussion today. Thanks, of course, also to Xsolla for making today's event possible. Just a few final notes as we wrap things up here. Today's webinar was recorded, and you'll be receiving an email with a link to access that recording when it's available. So check your inboxes for that if you missed anything or if you'd like to view the webinar again. Also, in just a moment, a very brief survey will pop up on your screen. You'll be able to rate this webinar on a 5-star scale and also provide us with comments and other feedback. We love to see that, so please take a few moments to let us know what you thought about today's webinar. Finally, a reminder that today's webinar is copyright 2022 by VentureBeat. The presentation materials are owned by or copyrighted by VentureBeat, which is responsible for their content, and the individual speakers are solely responsible for their content and their opinions. Thanks so much for being with us today. That does conclude today's VB Live webinar. Have a great day.